And away from that, we move over to other stories in the business desk as we have that the Nigerian equity market recorded a fourth consecutive weekly gain to kickstart the last quarter of the year as the all-share index grew by 1.61% to close at almost 41,000 points. Similarly, stock market investors gained 340 billion naira during the week as the total equities market capitalization rose to 21.3 trillion naira, a 1.6% increase compared to 20.96 trillion naira recorded as of the end of the previous week. This is contained in the weekly stock market report released by the Nigerian exchange group, NGX. Notably, the all-share index rose from 40,000 to 22.17 points recorded as of 30th September 2021 to close at 40,868.36 points as of the end of the review week. And now joining me live on News Central now is the Managing Director, TrustBanc Capital Management Limited, Azeez Lawal. It's so good to have you with us another Monday on the news.
Thank you for having me. Good morning.
All right, Azeez, let's kickstart business now. The Nigerian equity market recorded a fourth consecutive weekly gain. What, in your own view, is driving the market?
Yeah, thank you. In the last few weeks, we have seen investors bargain hunts across different sectors. So it's not one thing specifically that is driving the market. But in addition, significant gains from highly capitalized stocks like Dangote, Nestle, particularly we saw that in the last week of the quarter. They have also supported the bullish run of the market. But last week, it was a turn of Airtel to lead the bulls. The rally in Airtel we saw last week will be linked to the announcement of Airtel Africa's intention to buy out a minority stake, about 8% in Airtel Nigeria, a development that we believe would help boost the plans of FBNA to divest from Airtel Africa. As a result, we also saw a significant movement in price of FBNA itself last week, which further boosted the performance of the ASI. That's the all-share index. I mean, the benchmark index extended its gains on all 5 trading days that we saw last week, a momentum last seen July 2021. This week, however, we anticipate a moderate start to the new week with the possibility of profit taking. And generally, we expect a mixed week, buying significant cross deals. I mean, on a final note for investors in equity, FBNH may be an interesting buy that we will advise audience to look at. However, considering the fact that the price moved by over 20% last week, we would advise that we should be cautious around that stock. Thank you.
Okay, we started off with positivity last week and also this week, and of course, cautioning investors. Now, the NGX group have unveiled plans to list its shares by way of introduction. What is the implication of the listing to license holders and the public?
Yes, I will just give a one-liner there. Typically, when any stock, any company, regardless of the status of the company, maybe a self-regulated entity or a public entity, when you list your shares, you provide, you give investors who currently own those shares the opportunity to sell. You kind of give them liquidity, and you also give the public the opportunity to come into those kind of companies or listed shares. From what we are going to have a session with the NGX this week. And now it will give more details around how this will work. But typically, when a company lists its shares, it gives investors the opportunity to come in, and those that want to exit to exit. Thank you.
All right, thank you so much, Azeez. Now, last week, the Debt Management Office, DMO, released the fourth quarter FGN bond calendar for 2021. How do you think the market reacted to the news, and what should we expect this week?
Yeah, to start with, it was a mixed week in the bond markets as it opened on a bullish note. But I mean, it ended on a bearish note with mild sell-offs witnessed at the mid to long end of the curve. As you rightly noted, the DMO released fourth quarter FGN bond calendar for 2021 during the week. Okay. As expected, I mean, the DMO had a few tricks up its sleeves.
All right.
And typically, they do this on in a bid to spark bullish sentiment in the secondary market, which in turn helps to further drop funding costs for the government. The maturities on offer, particularly on the short and mid ends of the curve, that's 2028 and 2026, were swapped for 2026 and 2037 respectively. Typically, this swap, it throws short sellers into who are looking to cover their position. It throws them into a buying frenzy, which was what we saw.
Azeez, I don't mean to cut you short, but what do we expect to see this week?
Yeah, so in the absence of major catalysts this week, we expect a tepid session this week. Thank you.
All right. Thank you so much, Azeez, for joining us on the business desk on the news.
Yeah, thank you.